Hello, chart watchers, and welcome to this August 20th Market Watchers Live show with your hosts, Erin Swenlin and Greg Schnell. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. And welcome back to us here at Market Watchers Live. Let's go take a look very quickly at what's going on in the market right now. Okay, and as you can see at this point, we're looking at a slightly up for most of the indexes. Of course, the NASDAQ is showing lower at this point, down 13.4 points. OEX is mostly unchanged. You can see S&P and Dow are up slightly. S&P 400, we're also seeing a move up after testing Friday's close. And Russell 2000 was in negative territory, but it is making its way back up. TSX, we've got mostly unchanged, but up slightly, 1.28 points. And we could see that the Treasury yields are down quite a bit here and currently reading at 2.83%. UUP is moving about, well, actually, it looks like we're about the same here, unchanged. And gold up slightly. USO is moving lower, but it is at no change currently. Has been on the upside most of the day. And we can see that the VIX is rising just slightly, currently reading at 12.67. Well, Greg, we're back from our lovely cruise. Thank you for covering for Tom, who his flight got canceled, so he's probably still on an airplane.
Yeah, he's at 37,000 feet. So, yeah.
Yeah, I don't think he'll be streaming up there. But so anyway, I'm so glad you were able to fill in here somewhat last minute. So I'm very happy to be back. It's sort of weird being back at the helm here and getting into this Market Watchers Live, getting right back into the swing of things. So I'm pretty excited to get started. So why don't we go ahead and look at our upcoming events and our agenda for the day. So as you can see on our upcoming schedule, we have, oh goodness, I have a workshop tomorrow. I'm not sure exactly what I'm going to do it on, but we'll see. Bill Shelby will be coming on later for our guest appearance on Thursday. Friday, we have everything stock charts. And I hear, Greg, you're going to probably do that for us. So that should be interesting. And today, though, we have a packed agenda. Of course, we have Monday setups, being that it is Monday. And then Greg's going to do a segment on international ETFs for us, see what's going on with those. We have the 10 and 10 to 1. And our first symbol is going to be Shopify. So we'll take a look at that first. And Greg's going to do that as Tom normally does. So we'll be getting your symbol requests. And then I am going to finish with the DecisionPoint report. So let's strap ourselves in and get this started. All right, so there were some stocks in the news that I was going to go over today. So let's take a peek at those. If I can get my screen to cooperate. There we go. Okay, so I am going to move us over here, and I'm going to pull up just a few of the companies that I'm going to talk about here. First of all, I'm going to talk about Pepsi. We are seeing that at this point, they are in the process of acquiring SodaStream for $3.2 billion. And that's going to give them, a different way to reach their customers within their homes. So we have right now the $144 per share deal is likely one of the last bold moves for the CEO, who's going to be retiring after a 12-year reign in October. So that's an 11% premium to SodaStream's closing price on Friday. And we can see that what's going on with this chart. We've got the news. Well, as you can see, I'm seeing that PMO getting ready to turn up. It's certainly decelerating at this point. We had kind of a broadening pattern coming in here. And generally, you don't want to see those. You end up getting a lot of volatility out of that. But you can see 5-day EMA just recently crossed over that 20-day EMA. So that's all good news. And like I said, the PMO is starting to rise. And check out volume here as far as the OBV is concerned. I have to say, though, the OBV is rising, but when you look at the volume picture here, you can see that although it's all positive, it is starting to pull back just a little bit on the rise, and that can sometimes be a warning sign. But I have to say, with the OBV breaking out to a new high here, I'm not as worried about that. The idea is that we do have all of that positive volume behind this move. So I think PepsiCo is looking pretty good right now. And let's look at soda, which is the one that they're getting ready to pick up. And of course, we got a big giant gap up here for SodaStream International on this acquisition by Pepsi. So we're currently reading here up 9.63%. It's quite a big change, a $12.51 change just today. So I wouldn't be reading too much into this chart as far as my indicators go. And, you know, we've had such interest in this stock, and so it really has shot up in an almost parabolic manner. So interesting one to look at. You know, Walmart is also in the news today. Let's see, whoops, not that one. There we go. And apparently they've asked its cosmetics suppliers to consider sourcing their goods in countries outside of China. They're looking for ways, I guess, to mitigate the impact of the new tariffs that are coming out. You know, at this point, the world's largest retailer is asking all those beauty suppliers, if they do have facilities outside of China, to go ahead and start broadening, you know, consider investing in them more. So let's look at what's been going on with Walmart. Of course, we had that big gap up last week, but we are pulling back slightly from that move. Currently down 0.4% there for Walmart. You can see that the PMO, it was rising nicely, of course, with the slow rise and breakout here that we had last week. You can see from, in fact, I'm going to annotate this just to make it a little bit more interesting for us all. All right. There we go. So you can see we had quite a bit of resistance here that Walmart was really not able to get a good move up past. But we did see at the beginning of August, it did start to break out. And then, of course, we now have added this gap in here. So we'll have to watch if it does form this as an island. Of course, islands are reversal patterns, and that would imply that we would get a closure of this gap. So we'll have to watch and see what the plan is there. I'm not so sure we're looking at an island at this point, given that I have, you know, the PMO has been rising nicely with that previous rise. And of course, you've got the EMAs lined up in beautiful fashion. But I would hold a little caution there. And you can see, I'm going to add that right here and skinny that up a bit. Here we go. You can see that right here we had some very strong overhead resistance as well that kind of provided a little bit of support on that gap up. I thought that was interesting that came in right there. And you can see it is pulling back just slightly below that area of what was resistance and is now support. So I'd be watching it closely. I think there is a possible cautionary flag for us here an attention flag that's telling us that we could be looking at an island reversal here. And that's something we don't want to be considering at this point. All right, and the other one that was in the news, and we're going to talk a lot about this one, and in fact, our poll is centered around Tesla. So would definitely like your opinion on what you're thinking about Tesla, but you can see, to me, ugly chart. But here's what's been going on in the news. First of all, you know, we had some analysts downgrade Tesla from to a sell from a hold today. And they mainly are citing the fact that they don't expect the company's production rate of 5,000, you know, Model 3s to be a sustainable number. And apparently, you know, Tesla did manage to make their deadline as far as the cars that they had planned in motion, but they just barely made it. And you know, analysts are saying that they're really looking too high. They're setting their sights too high that they probably will not be able to take care of business. Excuse me. So, at this point, Elon Musk has sat down, I guess they sat down with a YouTuber to discuss the future of electric vehicles. And he's saying that, economies of scale in an insanely competitive auto industry, is making barriers to make a cheaper car. But he was saying that he could end up producing a model at about a $25,000 price point. I know a lot of concerns as far as analysts is, that they're now taking these, down payments, or, they're looking for people who are going to invest in, a car, but they're not going to be refunding money. So if you put your money down to reserve your car, if you change your mind, you're not going to get that back. So that's causing some issues as well as far as analysts are concerned. They're not so sure that's a good thing. When I look at the chart, of course, I have a PMO sell signal on this very deep decline that started about mid-August when Tesla started making these headlines, and it's sitting right now on short-term support at that July low. But when I see a PMO looking like this, and then look at the OBV, it's taken a dive as well. And Scooter, wow, we were up in the 90s, and now we have moved all the way back down to an 11.5 ranking. So I personally am not liking Tesla, but I haven't answered our poll just yet. So go ahead and take that poll. You'll find that in the tab in the chat box. You can go ahead and click that and take that poll. All right, we had lots of upgrades and downgrades that I think you might be interested in here. So let's go ahead and we're going to go take a look at that. Okay, so as far as our upgrades go, let me get in, make sure we're going to start here with upgrades. Baker Hughes came in with an upgrade. They were set at a neutral, but they have been moved to a buy. And we can see that, we're hitting very interesting support level here, and getting that upgrade. This could be an opportunity right now. Of course, as far as my technicals and what I look for when I look for those Monday setups, et cetera, I wouldn't be in this just because we had a 20, 50-day negative crossover. The PMO had a negative crossover. It's moved into negative territory. But I can guarantee Tom probably would be looking at this with some interest. The other upgrade we had was Flare Systems, and you can see it's making a nice breakout from what I would say was an ascending triangle. It tells us we should expect a bit of a rise here of about, looks like $3 coming out of this breakout point. The PMO is looking pretty good now. It had decelerated, looks like it was going down for a move to break down, but at this point we're looking pretty good here. The PMO has turned back up on this breakout. Other in the news here, upgrade for Nike, and Nike has been moved from neutral to overweight and neutral to positive by two separate firms. And you can see a nice little breakout here on Nike. We had a whipsaw sell signal here, so we sucked in a bunch of the bears, and now we've made a nice big move up to the upside on Nike. I think it's looking pretty good. Qualcomm has been something Tom has been very interested in talking up quite a bit, and we can see it was also upgraded from a neutral to a buy. I've got a flat PMO here, but we do see a short-term breakout, and overhead resistance isn't really apparent until we start hitting that 68 price point. And we have a few downgrades, and then I'm going to pass it on back. We'll get ready to start our Monday setups. But we had Kinross Gold Corp has been downgraded by RBC Capital from an outperform to a sector perform. So it's not, a real terrible downgrade, but I don't like this stock. I don't like the setup. We've been on this really bad downtrend. OBV, PMO, all of those look poor, but I would keep an eye out. If the PMO does decide to make a turn here in oversold territory, could be interesting.
I think that one's particularly funny that they get the downgrade after it's been falling for a year.
Yeah, exactly. Took a little while, didn't it, Greg? US Silica Holdings also on a downgrade from a buy to accumulate. So again, not a horrible downgrade here, but we have been in this decline. Might be finding $22 as a good area of support, but again, this one does not suit me as far as my trading style. Given this very negative setup, those EMAs, and of course the PMO sell signal. And that completes our look at the technical news. And I think it is time to go ahead and move into our Monday setups. I know I think I had about 6 or 7. I'm still trying to pick which one I like the best. So as I'm going through it, I'll probably pick it right there. But why don't we go ahead and get started, Greg? And I'll let you go first. I know you have some interesting ones, I'm sure.
Okay, I got a few. For some reason, I shared the wrong screen, so that's
Oh, I
a
like
rookie
that though.
mistake. Can you can you see that screen now?
Yes, we actually could.
Okay, good. And Shopify is up?
Yes.
Okay, good. Okay, so what I wanted to talk about, let me just go to Lulu. That's going to be my Monday setup. And so one of the things I like to look for, obviously, is a climbing chart. This one's doing that really nicely, but it's consolidated for the last 2 or 3 months. And one of the big changes in Lulu is their menswear that has really made the stock pop. And obviously, it's already run quite a bit. But I think with the strength of the consumer right now, this is a nice little push above resistance. If we go to the daily chart, we can see that, just basically holding here since last earnings, and it's probably ready to report earnings right away. That might be one of the reasons for caution, but it's also, this unfortunately the stock's made huge moves on earnings and then not much since. So anyway, Lulu was an interesting one. I want to cover off a group of stocks today that I think are particularly interesting because really they're the primaries in an industry group, and they're all starting to make a move together. This article was featured in Barron's as well, but I've been tracking it lately just to watch what's going on. So this is CF Industries, and they have fertilizers, which is kind of their big thing. And obviously lots of support around 46, a gap up, and now a pullback, and just starting to make the move again here. But if we look at this chart and compare it, just let's go to the weekly. What I want to show here is, this everything about this chart is climbing. The PPO is really nice and strong. Relative strength is breaking out to new multi-year highs. The scooter's high. The full stochastics can stay up here for months. So this is just a beautiful climb, but it's this breakout really above kind of the 45 level that has been holding the stock back for almost a year, and it's just started to get going. So that makes me a little more interested. The second one in the group is Mosaic. What we see on Mosaic here, it is basically just broken above this $28 or $29 level, and it's sitting at 30. So it's kind of broken out, pulled back for a bounce. We can also see that this looks like it's ready to go through a multi-year base here. So I particularly like this setup. As an industry group, it's really nice to see the whole community, I'll call it, start to swell at the same time. So on going to a daily view for that chart, what we see is this $29 level was pretty major resistance going back all the way to January. And while the S&P is just trying to get back to new highs, this stock's actually been able to climb to fresh highs. So that's nice. And the relative strength we can see goes all the way back to new 52-week highs on the chart. So everything about it looks pretty good to me, and I particularly like the bounce off 29. If I was to just use the inspect feature here, so here's 29, and we can see the resistance level, and then pretty much starting to bounce off that. So I like that one. But one of the ones that most people might not know the name of, there was two companies. One was called Potash Corp, and one was called Agrium. They're both Canadian companies. They merged together and formed a new company called Nutrien. And with that, they'll now be a serious competitor to Mosaic and CF Industries. But if we look at the $55 level on this particular stock, just maybe we'll do it. I'm just trying to show different ways to apply the line. So Erin does a good job using the annotation tool with the support and resistance line. I'm just going to show it using some of the other tools on the platform. So I used the inspect on the last chart. On this chart, I've put a horizontal line in at 55. And so we've had this nice breakout, come back, pull back, and it looks like we're finding support at this level. But the fact that all three of them are doing so well is quite nice. Now, I am very bullish on the whole group. We can see a nice big uptrend here. Things look good in general. And then if we go to the weekly chart, this is basically $45, and it spent almost a year trying to get to $55, which is not a bad return, right? 20%. But I think it's this kind of building block area, and now it looks to me like it's ready to start maybe a move to 65 or 75 and get going. So with all of that, I think there's an opportunity in this cluster to see things work out well. Recently, we've had improvements in soybean, wheat, and corn. So some things there might also help support that. One of the other areas, and just not because I'm Canadian, but I think there's some charts in the banking sector that look particularly interesting. So TD is a Canadian listed bank, but they're the number one outlet in New York City. In terms of number of branches, but you can see this stock is just starting to push to new highs here. The Canadian banks do pretty well. We, as a group, we only have 5 majors, and they're really dominant. So they all trade on the U.S. side. But here's BMO, if it refreshes. There we go. And so it's just trying to break out, not quite to new 52-week highs, but this 82.41 is here, and it's just starting to push up about 6-month highs. Looks a lot like the U.S. chart, U.S. SPX chart. So everything's engaged for the stock to start riding higher. The reason I pointed out is all of these stocks report over the next week or two, and so following them right after their earnings might be an advantageous time. So that's why I'm just trying to point them out now. For some reason, that chart didn't fully load. Let's try that again. Okay. So this is the daily version, but you could see kind of 6-month resistance just starting to push up here. The volume doesn't look like much. They trade obviously a lot larger on the Canadian side, but these are big banks that trade really, really well. So wouldn't be too afraid of those in terms of volume. And this is breaking out here. The PPO is just turned up and is just starting to accelerate. So that's a nice place to kind of grab on. The full stochastics is up above 80 and rising. So nice strong sector, or nice strong chart there. And the last one I'll do out of this group is the Royal Bank. And we've got the same setup here where the PPO is just moving above zero, breaking above 6 months of resistance here. So everything is on track. I would say the scooter is the only thing that bothers me. I don't like them when they're in the 50 level. And just for screen real estate, I usually put my relative strength line behind my scooter ranking. And in this case, they overlap so much it's too tight. Okay, so there we have the relative strength, and you can just see at 50, it's basically performing in line with the market. We're in line with the large cap peers, but right now the large caps seem to be dominating the market space, so that's all good. Anyway, we're above the 10-week and the 40-week. This looks pretty nice here, so I think those are some strong stocks to be aware of. There was quite a few banking stocks that were, or financial stocks that were hitting new highs. And so I think from that basket, we have lots of nice stocks to check out. Another one that is interesting is Workday. And we're going to spend a little bit more time on Workday. So this stock struggled, call it, in the $95 range. Under $95 range going for 3 years. And then it moved up gently and spent 5 years, spent about a year trying to get above this 120 level. Don't get me wrong, that's a wide range, but between 100 and 120, but it spent another year there. We've just spent another 9 months or so in this next box. So if we were to take an annotation tool and just, why didn't I get my annotation tool? This is really weird. Try that again.
Hang in there.
I don't know why that's not working. That's quite odd. Haven't seen that before. Great, a Monday morning for Greg and a Monday morning for the chart notes. Okay, there we go. Got it working. So what I want to show here on this chart, and I'm trying to remember who was the author that talked about setting up rectangles on your chart, but for some reason I'm just too quick this morning or something. I can't get it to grab. Okay, let's try this again. No. Okay.
Yeah,
I'm not having any luck with the annotation tool.
Yeah.
I don't know why. Okay, so let's leave that. But the point I wanted to make was we seem to be moving in boxes here. This was about a $20 box, and now we've got another one from 120 to 140, and it looks like it's ready to break out to the top side again. You've just got your PPO breaking this down-sloping trend line and turning up well above zero. So I find that a good place to look at the charts. I'm just going to zoom in a little bit. So this is all weekly, and then we'll go to the daily. But what I want to show here is when you get this nice slight downtrend in the PPO and you start to break back above it, that's usually a nice place to enter. Same thing over here. You had this downtrend and then it kind of give you the push. And this was the $20 move that you got here. So comfortable place to get on board. Everything about this, there was a whole bunch of stocks in the software sector. And if I was to just list them off, Teladoc, ePay, Paycom, Alarm, WorldPay. I mean, all of these charts are just raging. So there's quite a few to move through there. A lot of them have run a long way. So I'm not sure that they're today's entry, but this workday on the daily chart, that just looks sweet. No other way to describe that. You've got a nice consolidation here and now pushing above into the next box. Some other groups that were starting to run was the diners. The one I'm thinking of the most is Darden. CRI is not DRI. There we go. Okay, so Darden Restaurants, and what we see here is gap up and now consolidating sideways and starting to continue to accelerate. You can really see, I mean, quite frankly, the whole chart here in the middle, and we just are starting to get rolling. So if we look at that on a weekly basis, this, call it $100 level was a ceiling for most of 2017, 2018. We had the earnings gap and we've moved sideways, and now we seem to be starting our run out of the earnings. So I like that. That's a nice place to look at that chart. Everybody likes a burger. Let's go to Wendy's. What we see here, Wendy's, this stock is starting to break out of its box. So again, a whole industry group starting to accelerate. That usually makes it quite nice. And I've got one more, and then I'll turn it back over to Erin. So just give me a second, and I want to cover PB. And this is Potbelly. And what we see on this chart, look at this just massive base that has been building here. And we are now breaking out to new 52-week highs. So there's a little bit of resistance around 1420, 1450, 1499. But what I like about this chart in general is the scooter ranking is becoming the strongest it's been in a couple of years. So that would be one of the reasons for me to think about this stock. Obviously, when it builds these big bases, we're all thinking about Bruce Fraser and Wyckoff analysis, but this base is very wide, but there's a common expression: the wider the base, the higher the space. And so with that, Erin, I'll turn it over to you and let you share some Monday setups.
Absolutely. So I had about 6. I was really actually very pleased with my I used the general PMO scan. And I think it really did come up with some good selections. It took me a little time actually to pare it down. So I did pare it down to 6 of them. And I will tell you, I ended up picking Discovery as my Monday setup, but we'll go ahead and look at the others. And I'll show you, some of these look really quite nice in my opinion. So here we go, American Homes for Rent. This is a somewhat low in volume, but I really like the setup here as far as that OBV rising so gently and nicely. And you can see the scooter has moved up in to that hot zone above 75. And look at this really nice breakout coming above $23. And it is staying above that in trading, which I think is great. Of course, the PMO buy signal on tap right now. I think this one's set up pretty nicely. I didn't look at the weekly chart, so I'm going to take a peek at that just because I'm curious. There we go. And you can see an upside target right there, about, it looks like $24. So I think that is a pretty good look. And really, when I look in the thumbnail, I see what could be a flag. So you could end up with an upside target well above that. I wouldn't get that. I wouldn't be that optimistic necessarily, but I do think this one has room to run. And you can see the breakout above this declining tops trend line. So I think American Homes for Rent looks pretty good right now. Becton Dickinson was another one that came up. I didn't pick this one. I thought it looked pretty good, though, I have to say, as a possible pick for the Monday setups, but I opted not to, mainly just because we're seeing a little bit of a deceleration now on the PMO today. And the scooter is starting to kind of move a little bit slightly lower, but it is still in that hot zone. I think you could make a case for an ascending triangle here. And that was one of the reasons I liked it. As well, we're getting that breakout above previous overhead resistance here at about, looks like 253. And that, when you've got these triangles, you look for an upside target about the size of the back end of this triangle. And since I didn't use that low on that extreme bar down on the low for the day, I opted not to do that. Martin Pring calls those Pinocchio bars every now and then. So anyway, let's see, what is the next one I have on the list is Darden Restaurants. Really nice breakout here. This one looks great. I think we've got that PMO buy signal that's come in, and you can see we've been in a bull market for quite some time with that 50 well above the 200-day EMA. So I think that one's looking nice. If you look in the thumbnail, you can see the OBV is getting ready to make a higher high. Scooter's already in the hot zone. So I like to pick those momentum movers, those that are already in an upside trend. Being a momentum trader, that's how I do the intermediate term trades. I like this one. Didn't pick it. Let's look at 2 more, and then I'll show you my pick. All right, Energen Corp. This one I thought looked quite good. You could make a case, I think, for a flag formation, in which case, that would give us a pretty nice upside target. But we haven't quite broken out. We attempted the breakout back here on Friday, didn't quite get there. So that was a little concerning to me. One of the reasons I didn't pick it, but I think at the same time, with that possible flag going on and a pickup in the momentum, and look at the high interest there in the stock with that volume moving up on that move. So I think this one looks pretty good as well. I would like to see that breakout. That was one of the few reasons I didn't pick it, but I certainly think there's some opportunity here. And I believe we're making all-time highs on this one. No, not quite. So we could be looking at a pretty good intermediate term trade, but Monday setups are short-term trades. So I would keep this on your watch list because you've got some pretty good upside potential here, all the way back up to 90 where we saw it earlier. And you can see that PMO rising nicely, not particularly overbought either. So this one I think has some intermediate term possibilities. And the small cap healthcare ETF was another one that I was looking at. And again, a little bit low on the volume. One of the reasons I didn't pick it as well is the fact that since starting my picks, the PMO has kind of flattened out here on this move, on this breakout move today. We did see the breakout. Actually, I'm going to annotate this because I want to show you more clearly. So you can see today we're actually getting that breakout. It did close just above that breakout, that overhead resistance. And I think you could make a case, again, for what could have been an ascending triangle. And now we're getting the breakout from that. I think this one still looks good. I would want to wait. Personally, I would want to see it close above that overhead resistance that it's trying to break out above. So that would be my caveat as far as that one is concerned. But let's go ahead and take a look at my pick, which is Discovery. Couple of reasons why. Of course, I've got a PMO buy signal on tap. Again, it hasn't quite happened. Look at the nice move on the scooter. I like the breakout from this declining tops trend line. And I know Greg, not you, Greg, but Greg Morris is always picking on me because I do like to use the trend lines rather than just support and resistance levels. But Greg, if you're watching out there, I still, using those support and resistance lines, I still think this one looks great. You had that move above this short-term overhead resistance, which sort of matches up back here with the resistance level that we had back in January and February. I think you've got a nice upside target potential here. I would say my target would be somewhere above $29. I would probably, I said the 20-day EMA is the stop. I think that might be just a hair too much. Maybe more like at $27 would be my stop on this one in a short-term trade. If I were going intermediate term, I would probably keep it at the 20 or possibly 50-day EMA and look for a higher potential here. Let's look at that weekly chart, see what's going on with the PMO. And as you can see, at this point, $30 I think is certainly doable for an upside target here. So I had a target of 29 plus, and here's your plus up to about a $30 range. So, and I still think you could get some potential moves even higher than this. So I do like the setup, and look at the flag really on this weekly chart. And, you look at the length of that flagpole. Let's see, $21 to about 21 to 29. It's about an $8 long pole. Add that to the breakout area of about 29, and that gives us, actually up to about 37, which would line up with these lows we had back here in 2014. So I think there's a lot of upside potential in this as a short term and even an intermediate term trade. So that would be my pick for Monday setups. So let's go ahead and summarize what's going on here, and we'll see what our price points are. So I've gotten in at Discovery at 27.57. And there are the other picks that I had that you might want to add to a watch list or take a peek at. Greg, you picked Lulu at 135.12, so we'll see how you did. If I know Tom, he won't take your Monday setup unless you did particularly well, and then he will co-opt it and make it his own on Monday, but we'll see how you fared.
Cool.
Yeah, you had some great ones to look at too. So quite a few. And notice that DRI made both of our lists, and we didn't talk to each other beforehand. I did not know what Greg's Monday setups were. So that is an interesting development, I would say. What do you think?
Yeah, I agree. I think, there's a lot of charts trying to change shape right now, and the Russell is trying to break out back to a fresh new high. So we might start to see a broader advance here. I think especially with so much buyback going on with almost $1 trillion there, we seem to have a lot of support across the board, but there's some particular industry groups that are doing well. I think that fertilizer group looks quite unique because it's been out of favor for a long time.
Right, right.
So,
all right. I know you have some interesting international ETFs, and I'm going to go ahead and pass it back to you so you can get started on that. I saw Greg's list earlier. I think it's going to be quite interesting. So,
Okay, so here we go. We've got the DAX, and what we see on the DAX is so I want to go through some of the foreign markets and just cover them off. One of the great conversations we had at ChartCon was around trading foreign ETFs. And what you'll find is all of a sudden, all the foreign ETFs are doing really, really well in US dollar currency together, or they're all doing really, really poor in US dollar currency together. That isn't how they look in local currency. So, as an example, this DAX is the way the stock market looks in Germany. And what we see here is declining relative strength, breaking out to new 3-year relative strength lows. The stock is breaking a big uptrend line, and we've got a downtrend in momentum, and it looks like we're rolling over. You can see it better here in the Zoom panel. We're rolling over right around zero and starting to accelerate lower. Now, a negative PPO is usually just very clearly a place to avoid because the stock is it can be negative but heading up. That's obviously an interesting place to look at them, but not when they're pointing down and negative. That's on both sides of it. One is you're in negative territory, and the second is you're still accelerating lower. Well, this just broke the trend line this week. So from a horizontal support and resistance, call it 12,000. Lots of people are going to be looking in this area going back to 2017. There was a reason here. And then we had just 2 or 3 weeks that we spent underneath that level in earlier this year. So I think the 12,000 level is pretty important on the local currency side. Now, if I change this and show it to you with EWG, what we see on the chart is just trending lower, and clearly we're below the earlier lows. And the reason for that is the US dollar. So whenever you're looking at international ETFs, be aware that a lot of your trade is based on the US dollar. And so if you want to trade, I'll call it what the German markets are doing locally rather than a US dollar version of that market, you want to look at HEWG. And I'm not going to go through the hedged ones on each of these, but the hedged version gives us that same sort of shape that we saw originally. And the point would be if you're trading the US dollar and it's working in your favor, so the US dollar is falling and the foreign market is rising, that's going to be double to the upside. It's going to help you quite a bit. And so you really want to make that trade, not so much when it's doing the exact opposite. So when the US dollar is rising and the foreign market is falling, you're going to get hit twice as hard. So we want to be very careful playing the foreign ETFs, recognizing that really you're putting on a US dollar trade as much as you are putting on a foreign market trade. And I hope I explained that clearly. But the bottom line on here, and we're going to try the annotation tool. The bottom line on here is that we've got this downsloping trend in momentum. And until that breaks, I'm probably not interested. We have a downsloping trend in price here. And you could draw it as a wedge if you did it this way, or you could take this line here and not use the extreme peak, but use kind of where the market is building its trend line. And I would just call that a channel for the most part. So while it's working its way lower in the channel, I don't think this is touchable. Now, there was a point in time, obviously, when everything was accelerating 2017 and right up until May, when the US market and Germany looked similar. Really, this is kind of a hinge point where all of a sudden this has fallen off and the US market is holding up. So I don't know if that's just tariff talk or what's generating the chart change, but clearly the German market is not leading the US market or tracking the US market anymore. And so in this period here where it's sideways for almost a year, that's what that chart is telling us. When it's sideways, the German market is tracking the S&P 500. We're clearly not doing that right now. So So one of the points I wanted to make about the European markets were that they are not doing. I just want to go back and grab this chart here. Uh, they are not performing very well right now. And so the US market doesn't usually lead on the way down. It usually follows on the way down. If it's going to go down, it's usually global pressure that might pull it. The overall market is very, very strong. So looking abroad, I think, is a good clue to help US investors as to what they want to buy and sell. So it might not help you specifically with timing, but it definitely tells you to be more cautious when the foreign markets are falling. So in this case, we have France kind of sitting on a 3-year support resistance line. The PPO is turned over, and we've got lower. This one's actually the MACD. We've got lower highs sitting in here, but I would be concerned that this market is pointing down, much like the German market. If I did a trend line off the bottom, I'd be pretty close to coming in on this one as well. Um, it, I just think that these markets are a little more risky. And if we go to EWQ, we start to see this starting to kick down, and this, base near 52-week lows is pretty important. We see the MACD almost at zero here. So this is really not a place where we'd like to be too long the market. Okay. I keep taking myself off of the group I'm in. And here's the Shanghai. And what I want to show on the Shanghai is clearly this chart is ugly, pointed south. There's no reason to put on this trade in local currency, in foreign currency, in US dollars. All of them are breaking down. And so as long as this trend is continuing, you want to avoid foreign markets. And if the US dollar was to roll over, then we'll start to worry about that then. But right now, the chart's making lower lows, not every week, but every month. And so this is a good place to keep watching it. But we're at some sort of horizontal support going back 2 years. In the bigger picture, I still think the chart is weak and nothing we really want to buy. Looking at it through the A shares, which is how you could trade it, it's even worse. This is really odd for my computer to be this slow. So anyway, dropping down hard, and you can just see it's not quite at that 2016 low yet, but still that's a curve that you would do everything to avoid trading in that. I don't think there's any reason to enter that trade, even though the markets are up this morning slightly in foreign trading. Okay, I want to cover off the Nikkei real quick, and then we're going to jump into the 10 and 10 segment. So let me just go there and maybe one more back. There we go. And on the Nikkei, the point I want to make here, the Japanese yen has really been working sideways, and the the Bank of Japan has been buying a lot of ETFs. And so this market's had a lot of support from their local Federal Reserve. They're actually buying ETFs, not just quantitative easing or something like that. So in this case, if I took this upsloping line off the lows, we broke it a while ago. That was in here. Now I've got this kind of more shallow line, and we're still trying to hold it. It's critical at this point that we keep watching this, but you can see that the momentum on this chart is already pointing down. That's a problem. And we're starting to break below both the 10-week and 40-week moving average. That's a problem. And we have a downsloping trail of tops. So all of this added together makes me less confident that you want to own this trade. The way to trade it in US dollars would be EWJ. And again, we're breaking down to almost 12-month lows here. The PPO is below zero. So unless the US dollar is going to give you some tailwind here, I don't think there's any reason to take any of these foreign trades. So for that reason, as a bundle, I would avoid trading the foreign markets until either you get you buy the hedged version if that market's starting to move, but right now they're not. Okay, and with that, I think we're going to jump into, we're going to wrap that segment up, and we're going to jump into the 10 and 10.
Yep. Here's, all those international ETFs you were able to cover off, as you say. Let's go ahead and we will move into the 10 and 10. I'm going to pull up our handy dandy RRG chart. And here we go we had about 24 symbols, so kind of a light day. I'm not sure everybody knows we're back on air live. You guys are kind of quiet, or you're just listening intently because Greg and I are here finally back after what was that, a week and a half of hiatus there. All right, so here are the requests. I'm going to move this into an RRG, and we're going to turn it into daily since we always look at these more in a short-term perspective, and then I'm going to fit it on here. Pretty interesting there with SGMS. Let's go ahead and I'm going to take a little more of a peek here and what's going on. All right, so what we'll be looking at, a lot of times I'll pick these based on, northeast direction, starting to move in the right place, or if they have sort of an interesting setup. Also, go ahead in the chat room and like other requests because the most popular will be the second symbol in the 10 and 10. And currently we have a tie between BABA and BAC, Make America. So go ahead and go in there, see if you can break the tie, and let's get this started. Greg, go ahead and grab the screen, and you have about a minute per chart to annotate. And
Okay, perfect. Well,
that
let's go
annotation
to,
tool's working better for you.
yeah. Okay, so which one did you want me to start with?
Oh, Shopify, yes.
Okay,
That
good.
was the first one
Okay,
we
so here's Shopify, and I'm going to use the horizontal line down here and just grab it and add it at 135, which is where shop is currently sitting. And the benefit of just putting it on here quickly, what you see on this chart is this is a pretty important level going back quite a ways on the stock. Most importantly, the stock continues to find support at the 200-day moving average, and that's been, I'll call it, we're on our sixth test of that. If I had any concerns, it's that the scooter ranking is now the lowest it has been since the stock started trading. So this is quite low for it. I guess there was a brief blip here, might have been 28. But I'm a little bit cautious here that relative to its peers, the stock is actually starting to underperform somewhat. If we look at it on the big picture, probably the way I'd want to trade it is I want this full stochastic to start turning up before I'm going to try and buy this stock. So even though it's at a strong level of support, I wouldn't take it here.
Okay. Let's see. And the most popular, wow, you guys have really got in there. Most popular is BAC, Bank America.
Again, lots of the financials were showing up today, but this one has a couple of things I'm a little worried about on the big picture. First of all, full stochastic's already rolling over. So I want to see this PPO. I like the bounce that it started here. So this is giving me some comfort. I really want to see it break this big trend down here. So from this high down here, that would probably be more for me that the momentum is going to change, but still a bounce off the zero level on a weekly chart I particularly like. So I would take Bank of America as a short-term trade, but I really want to see it get through this $33 level first.
Okay. I'm going to go ahead and we'll do BABA. So everybody was so interested in that. We're going to go ahead and throw that in there.
If I'm not mistaken, they have an earnings release due shortly. So the Chinese stocks have been hit quite hard. And so we can see on this chart, if we were to just draw a horizontal line, we'd use 165. And that is a solid level of support. So I like that in particular here. So I think this is a good entry point for a trade. You're making 4-day highs or whatever, but I like the fact that it's breaking this downtrend. I don't like the fact that it's underneath the 200-day moving average, but right now I would take the signals we're getting. There's a little bit of volume stepping into the stock. So I like the volume. I like the fact that you're at 52-week lows and you can set your stop very, very close. So I would have my stop just under this 160 level and try and get it to run back up to the 200.
Okay. Let's see. Next one I have for you will be, let's see, a lot of interest in Teva Pharmaceuticals. So TEVA.
This group was looking really nice. I also saw a couple of others, Eli Lilly, some great stuff coming out of the pharmaceutical area. So I would encourage you to go look for a few of those. I'll just grab another list I've got here. Where did I see? There they are, pharmaceuticals. So I had Eli Lilly, Merck, and Pfizer all doing quite well. So as a group, the pharmaceutical area looks great. Anyway, obviously, this is looking like it's going to break through this 25 level, big, huge, almost 1 year base. I love that stock. This looks like a nice entry here. And a stop would go just below 22.
Okay, next one up, number 5, will be Disney, DIS.
Disney. Nice pullback after the breakout to new highs. So the stock broke out and then has pulled back. I think consolidating at support here at 112 is a nice entry, and I would just keep my stop relatively tight. I wouldn't let it go any lower than 110 because that would be saying that this support didn't hold. So if I was to annotate it, I would just my annotate button is not working. I would pick a horizontal line at 113. And if I'm expecting it to move back above there, but if it got to 110, I would be out and just wait for the stock to reset.
Okay. Let's see the next one in the cyclicals and apparel retailer, TJX companies, TJX.
This one's been a barn burner, hard to not like the stock. I have trouble entering it after a big push from 82 to 100. I'd like some sort of a consolidation before I try to buy it, actually. Somebody else might want to jump in on that, but for me, it's a little too stretched out. I like it as it's breaking out of the consolidation, not so much way out here.
All right. Next one up, let's see, Northrop Grumman, NOC.
Big defense stock. Trend is down. I'm not really happy with it. I mean, it was, such a smooth uptrend, and now it's pretty jerky on the downside. Don't mind the fact that it's trying to bottom here, but if you're looking for a short-term trade, maybe your stop is at 290 and you're buying it at 296. Maybe a move to the 200-day moving average, the top of this kind of downsloping trend, and that would be a problem. So if I was to take it, it would be a short-term trade. I just want to look at it on the full stochastics. One of the reasons I like it, I like to check the full stochastics, is that as the stock is, as this is pulling back and the full stochastic starts to fire up, this long downsloping trend in the PPO, if this starts to change as well, that might make a better signal. But right now, the stock has a lower scooter than it's had in 5 years. That really seems like a bit of a stretch to be early on that one. So on a weekly chart, I'd probably hold off.
All right. Next one is, let's say, an ETF, the IBD 50 fund, FFTY.
Okay. This is still trending lower. The PPO is rolled over. You're sitting down here. One of the things I don't like right now is the breadth on the NASDAQ is underperforming the breadth on the S&P 500. So the growth and momentum stocks that the IBD 50 typically follows, I get the feeling that it's a little more NASDAQ oriented. So I would stay away until I got a break on a trend, if I can draw one, and I can't. I just have no idea, and I can't restart my computer in the middle. But I would draw a line across the top of this downsloping trend, and if I could get that entry, I would take it. Obviously, this is a group of growth stocks, and if they're going to go well, you want to be on board. But right now, I'd wait.
Okay. And just for everybody, I'm going to give you homework, Greg. And
Okay.
you're going to have to annotate these similar to the way you talked about them once you get off air. And I will post those in the Market Watchers live chart list. So
Okay.
never fear, guys. We will have those annotations up for you. All right. So our number, let's see, number 9 is our only consumer staples request, Constellation Brands, STZ.
I almost typed in the Canadian ticker. Okay, so obviously big uptrends. the full still looks like it's ready to bounce here. We're just below zero on the PPO. Um, I, for me, what I would look at for this stock is I want a couple of these things to start to turn up. I want a positive buy signal on the full stochastic. I want the PPO to break its down sloping trend line, and that would be a better entry for me. And I realize that makes the stock a little, it might be a little higher entry, but at this point, there's nothing telling you to get in. If I had any concern, it would be that the full stochastic couldn't continue higher and is rolling over again. So that might suggest there's still more downside. And this extreme volume last week, I think they did a merger into the marijuana segment, would suggest a little bit more caution. But I don't hate the stock. I want to wait until the downward momentum has been exhausted and it gets another chance to refresh. So you might end up finding a multi-month base being built.
All right. And you were trying to get the Canadian version of one of those. Let's see, we've got materials, ntr.to, Nutrien.
Okay, so Nutrien is the one I covered off. I actually covered this one off in the beginning show in the Monday setups as part of the chemical group. And again, ntr.to and NTR, all the same. I like the stock. I like the industry group. And I think there's an opportunity here if we're going to start to see corn, soy, and wheat turn higher. I realize they're trade related, but if they can start to break out, I think this is a good pullback, and you can keep your stop relatively tight, the 50-day moving average or the 10-week. So,
all right. And that concludes the 10 and 10. Greg, I think you actually did it in 10 minutes. And I have to give you a congratulations on that because I can't remember the last time Tom could do it in 10 minutes. So congratulations on that.
thank you. There we go.
You are seeing the symbols that we did cover in the 10 and 10. And like I said, I know Greg is going to be kind enough to go ahead and annotate them and send them over so that I can get them up for you in the Market Watchers Live chart list, which you will find in the Market Watchers Live blog. There is a link right there at the top of the blog, and I also include it in all of the recaps that I write. So you should be able to find it. Just go to that blog's page to the Market Watchers Live blog. Okay, let's go ahead and move forward. And Greg, I'm going to let you do the market update, our final one here.
Okay, let me steal the screen. And I did not log into into the Market Watchers Live, so it'll be a live update with my version of events. Here we go. So market summary. Just generally everything's trying to poke its head a little bit higher today, so that's nice. I think the one chart that is really interesting so far is the Russell, and the reason that this is the Russell 3000, but the one I'm looking for is the Russell 2000. What I like about this chart is it's very close to trying to push back above these prior highs. It's broken the downtrend in relative strength. At least it's starting to push above previous August highs. I do want to see it break out here. So I'm watching the small caps quite closely to see if they can actually add any power. So that's one of the charts I really like. Working through the major indexes, again, most everything is green slightly, no real upside pressure at this point. The Dow had fallen quite hard and so is moving back quicker than the others. Usually when the Dow is the leader, that's probably in percentage terms. So just maybe I should go up here and explain that a little better. If I put this in percentage terms with the Dow, when the Dow is leading the markets higher, and in this case, it's more than the NASDAQ or the S&P 500, I'm usually a little cautious as to the overall trend of the market. So it's still positive, but it makes me want to watch a little bit closer. The transports are having a great day, which is nice to see, and they have held up pretty well. So those charts are strong. The energy sector back in favor today, but it's been out of favor for a while. So the perf chart is leaning heavily to the defensive part of the market right now. That's where we put up all of the the different sectors and show them in their relative performance. So over the last month, all of the defensive sectors are leading. With this is interesting to have both oil and airlines up high at the same time. Don't usually get those two working together. Usually they're an opposite. Natural gas is one of the charts that's quite interesting. So to see that group start to move is nice. Semiconductors, after the sell-off on NVIDIA's earnings, even though the earnings were fine, they pulled down 4% or something. So the semis are still a group to watch. I wouldn't say own, but I would say watch and try and be aware of those. And then biotech slightly underperforming today, but the pharma sector is doing really well. So continue to look in there. I'm guessing the US dollar is off because all these other markets are up. That's just a slight guess. It might be flat on the day, but any reprieve from a high dollar would allow those to start to bounce. The bonds yields are falling, so price is moving up, and we'll keep watching on that, but there's a big fight there, has been for a while. Commodities are pretty much evenly split across the board. Energy right in the middle of the pack here, so nothing really moving, and the same with the precious metals. Currencies, almost no movement today, so that's a nice refrain from the pressure we had last week. And with that, we'll wrap it up.
Okay. Let's go ahead, and I'm going to get started here on the DecisionPoint Report. Got lots to cover. Admittedly, being on the cruise ship last week, I didn't pay too close of attention to what was going on in the market, but some interesting developments on our charts. So let me go ahead and share that with you. Okay, so first, actually, I'm going to go ahead and show you the member homepage so we can take a peek at what's going on with the DP signal tables. So I'm going to start here with the Dow. What was interesting last week is that we got a lot of PMO sell signals showing up on the scoreboards in the short term. So PMO signals are developed in the short term on a daily chart. The midterm, intermediate term, the PMO is on the weekly chart, and then in the long term, we look at the PMO on the monthly chart. So right now we were seeing a lot of downside momentum. I am starting to see a little bit of a shift though, and we're going to look at each of these charts. There you go, another sell signal there for the PMO on the S&P 500. And then you could see NASDAQ actually had come in with its sell signal for the PMO back earlier in the week. So we were seeing that weakness first in the NASDAQ and in technology. We've got the S&P 100 also coming in with a PMO sell signal, although that took until Friday. Let's see, the 14th. Yeah, right around there, Thursday, Friday. So those were the signal changes that we had this week. But let's go ahead and take a peek at some of these charts. I think they're quite interesting. Well, I find all charts quite interesting, to be honest. So let's go ahead and we'll start with the Dow Jones. Now, I had annotated this rising trend channel, and I think it's still valid. It's awfully wide, but it's valid nonetheless. And we're just starting to hit the top of that channel. But more importantly, the Dow is trying to pass up this area of overhead resistance at that February top. And so we have two areas of resistance, in my opinion, that need to be broken above. If the Dow can break through that, I think, again, that's symbolic. I think that will be important because we are going to look at breaking above two areas of resistance there. So if price can punch up through that area, I would like that a lot. I say a PMO buy signal in the making, because remember when we looked at those scoreboard charts, we had PMO sell signals, but as you can see, the PMO has turned the other direction. And so I would be looking for that breakout. I think that it's possible. I think it could happen. One thing I am a little bit worried about, and I'm going to pull up my annotation tool here, is this very clear broadening pattern. Again, like I said, I don't like these patterns. They suggest more volatility, obviously, as you get further into the pattern, and they tend to be more bearish. So I am going to be cautious here on my prediction here of a breakout. God, I hate to use that word prediction. My forecast, I suppose, as far as a breakout on the Dow. The PMO buy signal, I think, is the most important, but I thought I would point out that broadening pattern that I'm seeing. When you look at the Dow weekly chart, you can see we also, it was kind of a loose interpretation here of an ascending triangle, and we did get the breakout to the top half above that that area of overhead resistance. We've got a PMO buy signal, and this one I would say is in the making as well. We've been waiting on the Dow to get this PMO buy signal on the weekly chart, and it appears we're going to get it. Now remember, our signals for DecisionPoint don't go final on the weekly charts until the final trade on the last day of the trading week. So we have to wait for the market to close on Friday before we can call this as a PMO buy signal. So a lot could happen between now and then, and it might prevent that PMO buy signal from shaping up. Let's go ahead in the NASDAQ. Like I said, we're seeing some definite weakness here. I wrote about this in Chart Watchers, I believe. And I'm seeing a possible double top here. You know, it's still in the formation stage, and I think this is going to be the important area of support here at 7,300. If it can hold that support, obviously this double top will not complete as far as the pattern. With chart patterns, it's important to note that it's not really the pattern until it executes, which means we would still need to wait. This could be a double top, but it wouldn't be an official double top until we at least get down here to test that area of support and what would be considered the confirmation line. But should this actually form up, and should it actually break down below this top back in March, the prediction or the minimum downside target based on the pattern itself would be bring price all the way down to 6,800. So I'm not going to say that's what we're going to see. Right now, I do think it's positive that we're holding on to that 7,300 level for the NASDAQ, but I would concern myself a little bit there. Okay. Here we go. On the NASDAQ 100 weekly chart, you know, we've had a buy signal in place for quite some time, since June. And we've had these head fakes, I would call them, as the PMO has come very close to getting that sell signal on the weekly chart, but it is pulled out. It's not looking too good right now. And even though we're in a rising trend, as I've marked this rising trend channel, we're still vulnerable to a test of the bottom of that trend channel if you want to go ahead and look at it that way. So I would be a little bit cautious here. I think technology is definitely showing a lot of weakness, and it's not a place that I would be looking to invest at this point. OEX, S&P 100, actually looking pretty good here. We do have the sell signal on the daily chart for the PMO, but you can see it is trying to turn itself back up. And remember, the NASDAQ was still moving down with very little deceleration, if at all. So we've got the S&P 100 getting that bottom, that scoop on it. So we'll be looking to see if we can't get a buy signal out of that. One of the things I did note is this reverse divergence. If we do end up seeing this come in as a true bottom on the PMO, you have lower lows and higher lows, and that actually would be considered a reverse divergence, which is a good thing. And so we would look for a breakout, but we can see we're already getting that move to the upside. We closed the gap on the OEX, but I still would be looking for more upside. I had pointed out a possible head and shoulders forming up, but again, very early. So I even caveated that. I know in my Chart Watchers article, this is really early to be looking for something like that, but I thought it was interesting because my eye could see the possibility of something like that. But we need a top for a second shoulder. It doesn't look like we're going to get it. And I like the change in that momentum to the upside. We've got, right now, we have the PMO buy signal on the OEX. It's still rising. It looks good. Looks like we are headed to test that all-time high. The S&P daily chart here. All right, there we go. And again, I was sort of looking for a possible little mini head and shoulders, but we still haven't formed a right shoulder. It looks like we're going to go up and test resistance at that short-term top from mid-August, it looks like, from a couple weeks ago. And so that would, of course, negate any type of a head and shoulders pattern. But we do see a rise now on that PMO. It looks like it wants to head up there and give us a buy signal. The weekly chart for the S&P 500 looks like we're headed up to test again all-time highs. We have the buy signal on the S&P. I think this looks pretty good. I would be looking for higher prices at this point on the S&P in the intermediate term. Let's look at the S&P 400. There we go. Nice breakout coming up here above that overhead resistance at that short-term top back in July. Haven't quite come up and tested that top that we had earlier in August, but I would be looking for that to happen. Right now, we do have a PMO buy signal on its way for IJR. That would come in today. It was not lined up for the buy signal on Friday, so looking good there. And the weekly chart for the 400, take a quick peek, still in a nice rising trend. And you can see the PMO did turn up before giving us that sell signal on the weekly chart. Let's look at IJR, the S&P 600 ETF. See a nice breakout here. Small caps are definitely looking better. You've got a PMO buy signal here for IJR, a little bit of a breakout above some overhead resistance that I was looking at around $87 for IJR. Looking at the weekly chart, quick peek here. Continuing on a nice rising trend. And of course, the PMO is rising. I've got this falling because we had it tip over the last time we did this review. So it is starting to rise again, and we do have a top, if we get a top, that would be above the previous one, and I think that would be good news. IWM also in the small cap arena, of course. We haven't actually gotten the breakout like we saw on IJR on the S&P 600, but look at, we've got a PMO that's about ready to give us a buy signal. You can see that small caps have been relatively strong amongst those other ETFs that we look at in that scooter universe for them. So I like that we're still showing strength here. I would be looking for that breakout on the Russell 2000. And if the dollar continues to rise in that rising trend, it certainly would benefit the smaller cap stocks. We have a buy signal still on IWM on the weekly chart, but you can see it's topped out and we are headed for a sell signal. Could be a problem when you're thinking intermediate term, but I think the daily chart looks good enough, and we should be able to avoid that downside move and a PMO negative crossover. Our climactic indicators, let's look at the condition of the market, or as I was saying in my ChartCon presentation, we'll look at the weather for the condition of what's going on in the market. These are the climactic indicators. I use breadth and the VIX with the Bollinger Band to make the connection as far as sentiment is concerned in the very short term. And you can see I invert the VIX because I'm looking at it as a very short-term sentiment measurement. And so I want to find those breakouts from bands to the upside or the downside. If it's the upside, meaning we have very low VIX readings, then that to me tells me that sentiment is very bullish and to look for a short-term reversal. So we want to see the VIX very low to kind of fuel a bull market, because you do want some of that complacency out there. But when it gets extreme, to me, as far as the Bollinger Bands are concerned, it becomes a contrarian indicator. Right now we're sitting right on that average, so not much to say there, but notice the new highs. We're hitting some very climactic readings on breadth, and I think that does support this move to the upside. If we've got that good breadth moving up like that, seeing those new highs pushing higher with price, that tells me that there's some support out there for higher prices. Short-term indicators are also looking quite good. We had that bottom. They're now above the zero line and still rising. We're only looking at it right now as, in neutral territory, especially the STVO. And, so I would be looking for higher prices in the short term as well. Okay, intermediate term indicators. There we are. They are rising, but we don't have the positive crossovers that I would like to see on these indicators. They're still vulnerable to a move to the downside, but you can see they've been very twitchy throughout July and into August. And that to me tells us that there's some indecision. There might be some issues here in the intermediate term as far as these indicators go and market condition. I don't like to see declining tops on these indicators and rising tops on price. So we'll keep a close eye on that, but intermediate term I think is still mostly neutral at this point. All right, moving on to the big four: dollar, gold, oil, and bonds. All right, I'm going to turn this back into an OHLC bar chart. And here we are. It looks like an island is formed. I think we're going to end up going down and closing that gap that had formed. I don't pay super close attention to gaps, though, on the dollar chart, because you do tend to get, with UUP, you do tend to get a lot of gaps that really aren't useful, that don't mean anything. But I think this one I would consider meaningful. And I would be looking for a possible closure of this gap and a move to test that 20-day EMA. Why do I say this? I'm seeing that top in the PMO, and we've also got the scooter moving lower at this point. OBV is not looking horrible right now, but it is in decline. I would be watching to see if it would break this rising bottoms trend line. Let's look at the weekly chart and get through these quickly, and we'll get ready to close the show. I can't imagine that it's almost over. Okay, and so you can see with UUP weekly, again, I think we're going to go down and test that 25-25 area. Might put a little bit more pressure on the small caps, but I think it will help get the larger caps, the S&P 500, 100 back up toward those all-time highs or bust above them. Now, what I find really interesting when I pulled up the gold chart was the premium and discounts that we cover from the Sprott Physical Gold Trust. And right now we're seeing some very heavy discounts on that fund. And so that is very bearish. I mean, people are feeling very bearish about gold, and sentiment wise, generally when you see those increases in the bearish sentiment, you should start looking for an upside move. I think we could look for an upside move here, at least in the short term, based on what I'm seeing on the dollar chart. If you look here at the correlation, they're still highly correlated reversely, meaning that they are going to travel in near opposite directions. And so if we do get that pullback in the dollar, I would expect to see a slight move to the upside for gold, maybe up to that 1200 level. The weekly chart, however, is really concerning. We've been able to hold this area of long-term support, and we finally lost that. We're losing it, I should say, this week. Yes, we're losing it over here. You've got the PMO on a sell signal. It is moving steeply lower. So I would say on a short-term basis, we might see a little bit of a bump back up to that 1200 level if the dollar continues to fall back. But after that, I would look for more downside for gold at this point. Let's see, USO. Let's go to the daily chart first. And as you can see, I'm going to get the annotation tool out here. I wanted to move these across a little bit more doesn't look like it's saved. So I'm looking at this area of overhead resistance. It's already trying to move past it, but hasn't been able to close above that, 1375 line. I would be looking for that right now. I think that we're seeing a turnaround here on USO. I know the PMO is still in decline. We are seeing just a little bit of deceleration, but that positive volume coming in here for USO, I think is a good thing. And I'm liking oil somewhat right now. I'll have to get your opinion on that maybe a little bit later, Greg, since you are the commodities dude. All right, we have a PMO sell signal at this point on the weekly chart for USO, and it's testing that rising bottoms trend line. So want to hold on to that. If we don't, I would look for lower prices. TLT bonds. And here's our peak. We're getting a breakout now above this area, I would say, of overhead resistance at that May top. We've got more to come at that 122.50 level. But looking at the setup here on the chart, I've got the PMO buy signal, but more importantly, and I haven't even had a chance to annotate it yet, we got a 5,200-day EMA upside crossover. That moves bonds technically into a bull market configuration as far as DecisionPoint is concerned. If we see that breakout hold above the 121.75 area, I'd look for some more upside movement on the TLT and on our weekly chart. I think this large head and shoulders is still somewhat in play, but we've got the rising bottoms on that neckline. We've got that holding up. So the PMO is turned up. So I'm thinking we're going to probably lose this particular formation, the head and shoulders, very large, which I think it would be, of course, excellent for bulls as far as TLT. All right, so that concludes our DecisionPoint report for this week. And here are the scoreboards all on one page. As I noted, it looks like I didn't get this chart updated. As I noted, we do have those new ones. All right, I think these are the old charts. I'm sorry, Zach, I gave you the wrong ones, but I will have the correct ones in the Market Watchers Live recap so that we have a good look at what actually is going on there, and you can go right in there and read the summary of what I just talked about. Greg, it's time to close us out here. I just want to say thank you, and if we have that poll, we can go ahead and put that up.
Yeah, I'm interested to hear what people think.
Yes, I am too. I have to take a peek here. All right. I think most people, I know I was in that camp, hit the brakes. I'm not interested. There's just been too much news stories. There's just too much buzz. I like to stay away from stocks like that. I like the fact that people are saying it's going to be a penny stock. I don't know about that, but yeah, we'll have to see. Were you on the hit the brakes?
Oh, absolutely. Yeah. The day it hit 355, when he tweeted that out, I went, okay, I would be out of this stock so fast, because now it's just trading on Twitter feed and
Right. Exactly.
there is no earnings. Somehow they're going to go from minus 770 million last quarter to positive this quarter. And, the shorts got slammed for $60 on that. Then it was the tweet about 420. And
All right.
then they got, yeah.
Yeah, I absolutely agree. But I know we need to close this out. It's been so great. I appreciate you coming in to cover for Tom. He will be back tomorrow. So I do want to thank all of you for being with us here today. Please remember to complete the survey as you exit. We love to get your feedback and hear what you think. And as a quick reminder, Market Watchers Live does air 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern. Have a great afternoon, everyone, and we'll see you back here tomorrow. Happy trading.